My name's Chris Tyra. I'm president of Bullish Exchange, and you're watching Taking Stock live here from the floor of the New York Stock Exchange.
Let's do it, folks. Counting down to the closing bell here at the New York Stock Exchange. Today is Thursday, the 14th of August. This is Taking Stock. I'm your host today, JD Durkin. A lot of news moving the markets today, though it wasn't entirely clear how the session would play itself out. Core PPI inflation spiking here today to a three-year high in the month of July as inflation stock for Wall Street leaving behind hopes of a jumbo September rate cut. The hot 3.7% core PPI reading sent markets lower originally on the day. Now maybe we're back at another all-time high, go figure. Next up, U.S. weekly jobless claims falling to 224,000 last week, signaling low layoffs, even as hiring remains perhaps a bit sluggish. Economists say the state of the U.S. labor market's mix of steady job security but weaker than expected payroll growth could push unemployment up even higher, above 4%. And finally, the Port of LA setting a 117-year record for monthly container volume in July. All of this as shippers rush to beat uncertain tariff-related deadlines. The surge comes amid sky-high U.S. tariff rates, a temporary truce with China, and even warnings that trade policy could keep pressure on prices. About 40 seconds to go or so until the bell today here on the show. We'll be talking with the great Michael Reinking coming up here in just a bit. Wormhole Foundation's Robert Berkey. First, FinTech TV's Volts Minari will be joining us for an interview in just a bit. But first, we take it to the closing bell here at the NYSE. Ooh. That's rough. Prompter. No good. And there you have it here at the New York Stock Exchange. Meridian Equity Partners doing the honors here in the wow, what a strange looking board. I don't frequently see the big board looking like this. The S&P 500 holding on to 0.03% gain on the day to technically close at a new all-time high. Once again, despite the hotter than expected core PPI number, I'm going to bring Michael Reinking in here in just a second, see if he knows more than I do, because I can't figure this one out. Small caps down 1.2% today. The New York Stock Exchange Composite down almost 0.3%, while the Dow down fractionally as well. Michael Reinking from the New York Stock Exchange joins us now. Okay, help me make sense of this, because today we had the headline PPI figure. It told one story. Then we had the core PPI number. That told a way different story. And if you asked me at 8:30 today if we'd be at an all-time high for the close, I would have said likely not. But what do you make of the price action today?
Yeah, I mean, we all kind of were scratching our heads a little bit. You know, when we talked on Tuesday, we highlighted the fact that the underlying inflation data, although markets kind of moved sharply higher, didn't necessarily tell a great story, right? We saw this services inflation, picking up, and the goods inflation a little more muted, which in this environment doesn't make a whole lot of sense. This morning's data, and I'll caveat this by saying the PPI data is one of the most volatile data sets. It's very non-intuitive when you start to look in that number to try to understand what's happening. And once again, we saw a big surge in the services numbers there, and that really kind of raised the question as to what's happening with kind of Fed policy. Now, we saw markets initially move in the directions that you would sort of expect, but the overarching moves are very, very muted, right? As you noted, the S&P 500 closed unchanged, back to that mega cap tech strength, all that broadening of the tape that we'd seen on Tuesday, post-CPI, unwound today.
So, Michael, what I love in there, we have a different big boards here at the NYSE. So this is one of my favorites, these two here, because we really get to see the intraday price action. What does this tell you when you look at SPX in the top right? We start down, we're in positive territory, we're kind of going back and forth. It's sideways is an action, is a direction, as our friend Jay Woods likes to say, but this to me is a market trying to find its identity, looking for the next big catalyst. What do you see as we kind of went back and forth trying to make up its mind today?
So as you pointed out, right, it's that S&P 500, right, the heavy concentration at the top end of that index is what would help that index close higher. If you look at the Russell 2000, which is right next to that, right, that was down about 1.5% today, right? So that those sectors are kind of a little more economically sensitive, more kind of more associated. The strength that we saw earlier this week was associated with kind of potential rate cuts. People are kind of raising some question about what this might do to Fed Chair Powell's testimony or commentary next week at Jackson Hole, right? But but rate cuts are still very much on the table. We're at like a 90% probability of a step cut
for September. And then I just admittedly haven't looked at the CME Group FedWatch tool much today. It's been a hectic day, but
Absolutely.
We've kind of priced ourselves into certain interest rate cuts and then priced ourselves back out. The last you saw, give me some sense for market participants' expectations for what we got, September, November, and December.
Yeah. So right now we're at about 90% for September. I think one of the narratives that's starting to pick up is whether we start to see a hawkish cut, right? So where Powell kind of does pivot a little bit more dovishly next week, right, suggesting that we could see that cut, but then we're going to be very, very data dependent as we move forward. I still think, as we talked about on Tuesday, the jobs number is going to really be the key, and then I also think it's really important to pay attention to corporate commentary. Kind of tune out some of the government data right now. It's very volatile. You can't look at one piece of data and kind of make a decision. You have to look over kind of a 3-month time horizon, but really listen to what companies have to tell us about what's happening in the economy, and we have the major retailers all reporting next week.
Yeah, I'm glad you mentioned that. I got about a minute or so left with you. Earnings season continues. Of course, we're still waiting for NVIDIA. We get that on the 27th. That itself is its whole own must-watch show, but retail is really going to tell us a lot about the strength and really the positioning of the U.S. consumer. What do you look for there?
Yeah, I mean, so I think we're going to, you listen to hear how the consumer has been reacting. We've seen, kind of sequentially, at the end of last quarter, the companies had suggested that as we moved away from Liberation Day in April, that there was an improvement in the environment. I would expect that's continued over the last couple of months. And then I think it's also really important to listen to the story around prices, right? And how, and the margin story, right? Today's PPI data, suggests that the retailers were actually expanding, had a big expansion of margin. That seems a little bit questionable based on what we've heard. So, kind of hearing what they're saying about kind of how they're handling prices at this point is really important.
Michael Reinking, who better? I know I say this a lot. Who better do I want to talk to help me make sense of all this? Because God knows I couldn't do it today. Michael, thanks for joining us. My man, thank you as always. Pass that off, taking this. What are we doing next? Over to the board. Howie, come on, let's go do a walk. We'll take a look at a few of the other big indicators. Ian, what's happening here? So what I love about this, Howie, if you're able to show this screen, this is what Michael and I were just talking about, the fact that you really get a sense on the price action in negative territory, back to positive territory, kind of in search of a broader identity throughout the day here. We've been talking about the VIX. We still got that VIX, that fear index level under 15 or so, that we do have it boosted up with about 34 basis points in action. KBE in the middle column, we're seeing the banks only down fractionally. As we talked about a little bit towards the top of the broadcast, seeing things like Brent and WTI oil, a little bit upward pressure here on some of those key commodities. And here at the show every day, we've been bringing you an update on the dollar index as well as the 10-year Treasury yield. Still a little finicky there on the left hand of your screen. What do we got? Bullish. Bullish. All right. Time now for a special look at something we did here yesterday. Chris Tyrer, he's the president from Bullish, stopped by the FinTech set, fresh off their anticipated IPO here at the New York Stock Exchange yesterday. The one and only Vince Molinari from FinTech TV sat down with him. Take a look.
We're broadcasting from the iconic New York Stock Exchange, and it's a great pleasure today to have Chris Tyrer, who is the president of Bullish Exchange, here with us today. And so much to talk about, and the auspicious day of Bullish going public here on the New York Stock Exchange. Big congratulations, Chris.
Thank you very much. Thank you for having me as well, Vince.
Well, absolutely delighted, and what an exciting day. The New York Stock Exchange, a little bit of a coming home for you, Tom Farley.
That's right.
Just the whole epicenter of finance and converging around Bullish today. Just a beautiful day all around.
Yeah, I mean, if you look back, it's an incredible, I think, moment for the industry as well. We founded Bullish 2020, launched in 2021, and the original vision was really that we didn't have a place where institutions could really engage with this emerging asset class. We had a very strong view that this was going to be a globally relevant asset class, and that institutions would need and want a place that they could engage with this. It didn't really exist, and that's just the nature of how crypto had developed, very retail first. We saw a gap in the market, and we looked to fill that gap. And look, there was some challenging periods on the journey here, the last 4 years.
Sir, but yes.
But here we are, as
right.
you say, the largest stock exchange in the world, and the reception that we're getting from institutions, I think, is phenomenal.
Well, I want to dive into a couple of things. We joke a little bit about some of the challenges. of any business, any new venture, but an entirely new sector. We've gone through crypto winters, we've gone through many other unpleasantries with bad actors, but the test of time has proven the original thesis was well correct. And very interesting to me is historically, right, institutional engagement first, and then we'll get down to retail.
That's right.
This is kind of inverted, right? We start on the retail side and hurry up and wait. The institutions have to come, they have to come, and you've proven it out, right? So where do you see this engagement with institutional participants going?
Yeah, I think, look, it's what institutions really need, certainly the more heavily regulated, is regulatory clarity. And, you know, we've seen this time and time again. If you look back, I mean, do you remember when, you know, the Swiss crypto valley was a thing, you know, back in 2018 and 19? You know, and that was really because the Swiss were very much at the forefront of putting in place clear regulation to give guidance to local companies, local banks, local investment firms as to how they could engage with this asset class. And we saw a flurry of activity thereafter. We saw that again in Singapore with MAS. We saw that you know, in Europe with MiCA, a flurry of activity. You know, since MiCA came into force at the beginning of this year, we've had Deutsche Bank launch custody, we've had SocGen launch custody. SocGen have launched both a euro stablecoin and a dollar stablecoin. We've had Commerzbank launch custody. So we tend to see this, you know, time and time again, that once we have clear regulation in place, we have a huge uptick in institutional interest and participation. That's why I'm really very excited about the US right now, because it seems that we're just on that journey here. So I think there's phenomenal opportunity here in the US.
After the
All right, welcome back to the show. You're watching Taking Stock. Time now for after-market earnings. First up, we'll bring you the latest from Alibaba Group. That stock finishing down for the day a bit after reporting a 7% year-over-year increase in total consolidated revenue for their fourth fiscal quarter of 2025. Deere & Company also making headlines today, cutting its outlook as both profit and revenue falling for their third quarter. Shares in DE falling 6% today or so in today's session. After the market today closes, we'll hear from Applied Materials, AMAT. They met expectations last quarter, reported revenues of more than $7 billion, up almost 7% year on year. Shares are so far up about 15%. Moving on with the show at this hour. Howie, come on over here. Let's go take a look. My man, I'll be with you in just a second. Hang tight. Time now for a few fintech, crypto, and AI-related headlines. That transition was pretty smooth. We made that one work. First up, BTC soaring to a record 124,450. Hello. That was earlier today before sliding back below 119. All this after Treasury Secretary Scott Bessent ruled out new government purchases for the U.S. Bitcoin Reserve. Technical indicators did flash mixed signals on whether the rally has peaked, but on-chain data shows there's still room for further gains despite the pullback being policy-driven. Next up, the largest U.S. banking groups are pressing senators to tighten the new Genius Act, warning that loose rules on interest payments for stablecoins could drain deposits and even threaten credit creation. Coinbase's chief legal officer firing back, claiming concerns with an attempt to stifle competition after the law passed with broad bipartisan support. We'll definitely shorten these down. Finally, Oracle and Google Cloud have teamed up to offer Google Gemini AI models through Oracle's cloud services and business applications. That's going to do it for your look at headlines at this hour. Let's now bring in our guest, Robinson Berkey. Thanks a lot for taking the time to be on the show today.
Thank you for having me. How are we?
Absolutely. Well, I appreciate it. Obviously, we just brought our viewers the latest with some of the headlines they need to know. Talk to me about what you're seeing across the broader crypto landscape, and a lot of this price action, it's earning itself new headlines by the day.
Absolutely. I think the theme is public markets access. So obviously we've got a lot of these digital asset treasuries, MicroStrategy leading the way, but we also have IPOs coming out as well. So we know Coinbase, Circle did quite well, and today we have Bullish. Bullish coming in obviously at about double the opening price today. So a lot of these U.S. consumers can now get access to these digital assets without having to do self-custody and these other various things. So I think the theme, again, is public markets access. Again, it's these companies going onto the stock market, not having to go through maybe a Coinbase or these other exchanges or on-chain. And I think that's important as we start to grow the consumer base that's investing in digital assets. I think the other piece of news, though, is the recent executive order as of August 7th that Trump came out with that's essentially opening up 401k savings to digital assets. So you have about $43 trillion that can now have exposure to digital assets. It's a win-win for both, right? You have these folks with their retirement savings that now get access to digital assets, and a maturing can happen for the crypto industry as well.
Yeah, let's start with the first part of your comments there, the IPO. Talk to me about how well received these have been, and has that come as a surprise? I mean, I feel like oftentimes for the IPO conversation, it's companies, they don't want to be the first one to dip their toes in the pool. They want to carefully watch others, but so far, I feel like if they're taking cues from other companies, so far so good.
Yeah, I think that the watching others is now beyond the moment. We saw MicroStrategy obviously kind of have that treasury vehicle that ended up obviously being able to be traded on the public markets. We have Coinbase Circle now bullish, and we're starting to see more of these digital asset treasury vehicles as well. I know BNB just did one recently, and other big, ETH of course, SharpLink, etc. I think we'll continue to see that theme as the rest of the summer goes on.
Yeah, talk to me a bit more about now that 401k component, because I think at long last, a lot of longtime crypto enthusiasts, they're looking at the space, they're saying we finally have a bit more of a favorable regulatory environment. What does that look like now, and what most excites you about that type of story that you think our viewers should pay a bit more attention to?
Yeah, I think that the theme is the maturing of the digital asset industry, right? We have digital assets on public markets, we have really strong regulatory tailwinds, and of course that executive order is one of those, right? So now we have all of these retirement savings, these 401k, you have a tax advantaged way to invest in digital assets. So of course it's not going to be the entire 401k, but it's a good way to diversify and get some access to digital assets in a safe and regulated way.
That's awesome. I really appreciate your time being here on the show today. It is great to have you, my man. Thanks a lot for being here.
Yeah.
Folks, more Taking Stock coming up after this, live from the trading floor of the New York Stock Exchange. Don't go anywhere. And we're live. Welcome back to the show. This is Taking Stock from the floor of the New York Stock Exchange. We're bringing the latest in startups, raises, and rounds. First up, PitchBook data shows 15% of venture deals this year have been down rounds. That's the highest level we've seen in at least a decade. This is a lot of the big name IPOs debuting well below peak valuations. AI startups, despite still commanding premiums, comprising 30% of the down rounds. Next up, Cohere raising $500 million at a nearly $7 billion valuation in a round led by Radical Ventures and Innovia, with backing from NVIDIA, AMD, Salesforce Ventures, as well as others. And finally at this hour, Mesh, the crypto payments firm behind PayPal's Pay with Crypto feature, securing new backing from PayPal Ventures, Coinbase Ventures, and others. That's going to do it for the latest headlines you need to know at this hour. Now we bring in Christopher Zara, news director at Fast Company. Put the Fast and Fast Company here for the show. Thanks for joining us.
Thanks for having me on.
Absolutely. Okay, let's start with AI startup Perplexity here. It's a big dollar deal and a lot of headlines for Google Chrome. What did you make of this story? I feel like it caught a lot of people by surprise the last few days.
Yeah, it did. I mean, it's not really a deal. It's basically like they made this unsolicited offer to buy the Chrome browser. The offer was for like 35 billion dollars, which is like twice as much as Perplexity is actually worth. It's perplexing to not to use the obvious pun there, but like a lot of people are saying like they can't really afford to do this. So like, and Google doesn't want to sell it. So why are they doing this? Well, Google was found to be a monopolist in a very important antitrust court case, and a judge may actually, in fact, force Google to sell the Chrome browser. Now that may or may not happen. But if that does happen, Perplexity is essentially coming in and saying, well, you know, if you've got to sell it anyway, we want to buy it. So that's kind of what happened. Whether or not they're actually going to be able to buy this is a whole other question. A lot of people do think it's more about optics. They want to be in the conversation. We're talking about Perplexity right now, and I think that's kind of what they want. So I think that might be a big part of what's happening here.
Yeah, absolutely. I was wondering to what degree you saw this as maybe a bit of I don't want to say a marketing ploy, but
Yeah.
part of it is sort of like perception drives reality and it gets us talking about it. Is that a fair read?
Yeah, for sure. Our tech writer, Mark Sullivan, essentially wrote something. Basically, he wrote that exact thing, which is that like Perplexity really cares about the optics. They really want to be in the conversation. They want to be thought of as the next Google. I mean, AI is changing the way we search, right? So there are going to be the next Googles are being created now as we speak, and of course, Perplexity wants to be seen as one of those companies. So of course, part of this is about the headlines they're generating with it, I think.
Yeah, that's right. You're one of the smartest writers I know at the intersection of AI and emerging tech. What are some components or really parts of stories that you're focused on you think the rest of us might want to pay a little bit more attention to?
Well, I love this whole thing, what's happening right now with Paramount Skydance. You know, their merger just completed, and the stock has been kind of going crazy this week, trading a little bit like a meme stock. It was up significantly yesterday, and now it's down a little bit today. There's a lot of volatility with this company, Paramount and Skydance, and I think part of it's because there's a lot of newness to it, right? They have new ownership. And there's just a lot of eyeballs on what this merged entertainment giant looks like. So I think seeing that volatility is kind of interesting. People are making comparisons to the old kind of meme stock frenzy of like 2021 when everyone was trading GameStop and an AMC. So I'm really interested to see. It's early days for Paramount and Skydance as a merged company, but I'm interested to see how that unfolds.
I got less than a minute with you, Christopher. You cover an unpredictable space. That said, I wonder if you do have any predictions for what the second half of 2025 looks like. Any exciting M&A activity you're on the lookout for, or other fascinating developments in the arena you cover?
Yeah, sure. Well, this is not tech, but the fast casual dining space, I think, is getting very interesting right now. There's companies like Sweet Green and Kava Group and Chipotle all had really terrible second quarters, and relatively speaking. These were establishments that were seen as bucking the trend of people like pulling back their spending because they're a little bit more glamorous than traditional fast food. But now the tables are turning, and all three of these companies are kind of lowering their outlooks a little bit for the second half. So I'm really interested to see if that continues and diners do continue to pull back.
Christopher Czar, it's great to have you back on the show as always. Far and away, the guest with the greatest shirt we've ever had in Taking Stock history. Thanks for being here, my man.
Impress you next time.
Oh, can't wait. We'll have you back soon, Christopher. Thanks for being here. Folks, more Taking Stock coming up live from the floor of the NYSE after this.
Hi, I'm Scarlett Sieber with Money 2020, and on this week's How Do FinTech Companies Actually Make Money? It's a question we all want to know. We're going to be featuring one of the few FinTech companies that have broken into the mainstream. You may have seen them on a Super Bowl commercial or two. That company is Ramp. Ramp recently raised a fresh $500 million at a whopping $22.5 billion post-money valuation. They're the definition of a high-growth startup. This new round came just 45 days after Ramp's last round. In June, Ramp raised $200 million at a $16 billion valuation, and that was a leap over the $13 billion valuation that Ramp announced in March. Look at that steep chart. Tell me Ramp wasn't the correct name for this company. So what does Ramp actually do, and how do they generate that revenue to back up those numbers? Well, like most successful fintech and financial services companies, they have a number of ways to make money. Yes, expense management, spreadsheets, receipts, mileage reports, riveting stuff, right? It may not sound sexy, but boring makes billions, as they say. Well, I say that, and that's all that really matters, so let's just go with it. Ramp's secret sauce is helping you spend less while they make money anyway. So how do they in fact make money? Let's break it down for you. Number one, interchange fees, aka swiping for cents. Ramp uses corporate cards. When you use one, the merchant pays a fee, usually 2 to 3%. Ramp gets a slice, you get points. Everyone wins. Number two, SaaS subscription fees, aka the eventually we're going to charge you anyways move. Ramp's platform has a free tier, of course, but many of the key components to running a larger business comes under the paid plans. So get ready for a little freemium upgrade, you finance nerds. You're going to grumble, then you'll pay for it anyways, then you'll expense it. It's a circle of fintech life. Number three, the transaction fees. Let's talk payables. Ramp isn't just a card, it's a full-blown bill-paying, vendor-paying, ACH sending machine. When you use Ramp to send money, especially by card, they can earn additional fees on top of interchange. Fees on fees on fees. Basically, they found a way to make money on both sides of the transaction. Number four, treasury services. When your idle cash becomes their quiet gold mine. If your company parks some cash with Ramp, that money doesn't just sit there playing solitaire. It really gets swept into an interest-bearing account or treasuries. That all earns yield while you're busy pretending to review your Q3 forecast or something like that. And who gets that yield? Who do you think? Ramp. Well, most of it. Customers get a little bit too. Number five, affiliate fees. The fintech version of, you might also like, do you want fries with that? Ramp offers deals on software and services. Notion, AWS, even purchasing your flights and hotels from Ramp partners. When you click that shiny discount and sign up, guess who gets a little kickback? Ramp from that partner. It's like monetized peer pressure. That's all we can tell you about Ramp now. 5 different ways they make money. I'm sure there's more to come. If you have questions about Ramp's business model or another company you'd like us to talk about, break down the revenue model, drop them in the comments, because welcome to FinTech, baby, when even the cost-cutting platform gets paid.
My time gives me to end the show.
There's too much going on. All right, welcome back to the show. We are wrapping outside of the iconic of the New York Stock Exchange. Time now for Talking Stock, where we take a look at some of the best tweets, the picks, and the comments of the day. This one comes from Michael Saylor from MicroStrategy, who says, volatility is a gift to the faithful. That's why we always talk about the importance, Ian, of long-term fundamentals, value investing, patience when you're an investor. Tomorrow here on Wall Street, we're a bit light on the earnings front after all because it's Friday, but we will get fresh U.S. retail sales data in the morning. We'll also see how markets continue to react and digest a hotter than expected PPI print this morning and what all this means, of course, for the September FOMC meeting. Don't forget, you can catch NYSE live tomorrow morning at 9 a.m. with the one and only Kristen Scholler. She'll be counting you down to the open, and she happens to be here. That's going to do it for Taking Stock. We'll see you again tomorrow. How do I do on timing? Oh!